Hello guys, and welcome to my channel. Phenomenal Effects Trader is here today. In today's video, I'm going to be showing you a very smart way of catching spikes. And in this video, I'm going to be using Crash 300 only. Crash 300 is one of the pairs people are scared of trading with because of its volatility. It is very volatile. Most traders prefer trading the low volatile ones like Crash 500, Crash Boom 500, Crash 1000, Boom 300. Those ones are not as volatile as Crash 300 and even Boom 1000, but Crash 300 is the most volatile among all of them. So now in this tutorial, I'm going to be showing you a professional way. I'll call it a professional way. It's a very smart way of catching spikes. You know, these spikes, like in some of my videos, if you've watched previously, I told you spikes can be caught. Spikes can be caught using different methods, and catching spike is the safest way to trade boom and crash, because if you want to trade against spikes, you must be good, and there are some things you must understand before you go to trade against spikes. Why? Because unlike every other pace, this pair in particular, its movement is sometimes somewhat erratic. If you're not good in, if you don't have a good knowledge of price action, or maybe smart money concept or market structure, you might end up losing money trying to trade boom and crash, the Crash 300. So there are so many strategies online. If you search, you see thousands of strategies people use to trade. While in some of my videos I have used indicators to show you how to catch spikes or even trade against spikes, in this video we are not going to use any indicator. We want to use pure chart, just the pure chart, and that is the best way to trade, because indicators do lag. Though indicator works, but it does lag. Indicator does lag at some point. It follows the price. The price does not follow indicator. All right, so now I want to show you two ways of catching spikes. Now on my screen here, I believe you can see this horizontal bar I drew here. This bar in blue. This bar right here. Now there's a reason I drew this bar. If you can see, you notice the price action within this range. We don't will have this bar. You see, the first time price got to this level, it reversed. Price got here again, started spiking, crashing down. It got again here, then crashed down. It got here again, then also continued crashing down. Now I am on the 1 hour time frame. The reason I'm using the 1 hour time frame is because higher time frame gives you more credibility. It gives more credibility on trades, because smaller time frames might be confusing. You know, if you're not good in doing tabular analysis, you might end up losing money trying to trade on the lower time frames. So I use the 1 hour time frame. Personally, you can choose to use the 4 hour time frame. It's still good, it's even better, but you should understand that using the 4 hour time frame will delay your setups from coming up, because 4 hours, how many 4 hours candles do you have in one day? About 6 4 hours candle. So it can take you up to maybe a day or two before you get a signal. That is why I prefer the 1 hour time frame. And the 1 hour time frame, it takes 24 candles to complete in a day, and so even if I get a setup or two in a day, it's okay, and I cannot maybe check another pay, and that's all. You know, I prefer trading to get a single trade. I prefer getting a perfect trade, a trade I am more confident on, a single trade in a day, than to trade more than 10 times with that, because I just feel like you trade and make money. A single trade can give you the money you need in one day if you know how to leverage and every other stuff, depending on your capital. No, okay. So you see, the price got here first, then retraced down, got here again, the next time retraced down here, got here again. After hitting here, it retraced. So now what you will do is, once you notice price has gotten to a particular level the first time and it reversed, watch out for the next time the market the price gets to that same level. Now, personally, what I would do, I would look for my crosshair tool, then place it right here. I think I should zoom in a little. 1 minute, okay. So this is the crosshair tool. I will place it right here. This is the way I do when I want to catch my spikes with pure price action. Once the price gets to where this crosshair tool is, and this is the opening of this red candle and also the close of this green candle here, this green candle. So once price gets to this place, I would, in fact, before then I would already set my sell limit at this point, this price. Set my sell limit. Once price gets there, I place a sell trade and put my stop loss a few pips above the where I entered. You see now, so you see when price gets to this place, to this level, it moved up a little, and you see where it started spiking, crashed down. Since then, the next one, it gave a bullish candle little and then still crashed down again, then went up again, still crashed down. Mind you, this is the 1 hour time frame. So imagine the amount of money you can make if you can hold your trade from this place down to here on crash 300. You know what? Crash 300, not boom 300, crash 300. So then let's say you personal that will want to hold for maybe 1 hour or 30 minutes. I don't like holding trades. I stack my trades I like flipping accounts. So imagine I pick the trade for that one, make some money, then I step out of the market. Maybe the following day, mind you, I would already mark this zone to see what happens if price gets back to that same zone. So if I notice the price has come back to this zone, I place my trade once I see price in this zone again, and you see I make some money. Spikes down. You need to be patient. You know, this one before here I would have made a lot of money, then I would step out of the market. This price got back here again and still spiked. See this one down up to here, the price is still moving up to now. So guys, what kind of market is this? This is a kind of a ranging market. It's a kind of a ranging market, you see. So once you notice the market is failing to create higher highs and higher lows or lower highs, like in this one you can see right here, the market came here, this is a high and this is a low. This a made little, this is only the wick that broke through this high, that cleared this high. It didn't even close above it, then it still came down and it didn't break this one also. You see the market. So it's ranging. So in a ranging market, you can catch spikes and make good money. All right, so that is it. Then the next one we will do to catch spikes is the next method is using the Fibonacci tool. Now, if you want to use this particular strategy now, using the Fibonacci tool requires you to understand market structure, have an idea of market structure, because in this case you'll be following trends. Now look from here, when we say market, I believe you understand what market structure is. It has to do with seeing higher highs, higher lows, or lower highs, lower lows. Now for this one, from here, this is a high. The market, there was a change of character here. Then the market got down to this place. This is a lower high, a high that is lower than this particular high. Then it broke structure here. So we have a break of structure here, created a lower low. There's another lower high, lower low, lower high, lower low, until it broke a changed character right here. Now, what are we going to do if we experience this kind of a market? Once you notice a change of character, like change of character here, once you notice, so what you will do is, in this case, you use the Fibonacci tool. Let me bring up my Fib tool. You may not have it here on your own, so you just need to press this plus sign, go down, you will find it. Look at it here. This is the fib tool right here. So once you select it, it will be up there for you to use. So I will click on the fib tool. So I didn't even click it. I'll click on it. So it's not available for me to use. What I will do is to drag it, place it at the top of this swing. Please watch me closely. I take it to the top, the beginning of the swing, that is the swing high. The swing started from there. This way it reversed. It reversed here. This way started from here. The swing movement started from there and reversed at this point. So you take it from the beginning of the swing to the end of the swing. Then you may have several numbers indicating levels of your fib. Like mine, I think I've removed some and I left this few. So, but you will find this 50 or 0.5% and 61.8 to 38.2. What we do now is we wait for the price to retrace and cross the 50 line, the 50 level. When it crosses the 50 level, this 50 level is known as equilibrium level. And above this 50 level, we call it the premium. Below the 50 level is the discount zone. So this is the premium zone, this is the discount zone. So once price gets to the premium zone, there's a very high chance of the price selling down, and it will even most likely break structure if it wants to maintain the trend. So once you notice that the price has crossed the 50 level, you wait for a confirmation candle, a candle that will indicate a reversal. Now, you see, this is where the price going up, it crossed this, the 50%, the level 50 it crossed. It crossed it, there was nothing to show it's going to reverse. I wouldn't enter this one here is an indecision candle. I think I should zoom this a little bit. Okay, so this is an indecision candle right here, this one here. Then I won't enter here. I would rather enter here. Why I will enter here? Because this is a kind of a bearish engulfing candle. You see that this green candle is smaller, the body of the green candle is smaller than the body of this red candle. So this is a bearish engulfing candle indicating a possible downtrend. So I would want to enter my trade here. But unfortunately, you see it first of all went up at this point before it started, up to this point before it started crashing. So meaning I would have to put my stop loss somewhere above, around this region. Please, you need to manage your risk properly, but there's always a very high chance of making money with this strategy I'm telling you now. So what I will do is I'll place my stop loss above in somewhere. Let me use this Crosshair tool to show where I would want to put my stop loss here at the close of this place here. This is where I would want to put my stop loss. So then you see the price crashed here, came down, another indecision candle, but it still continued going down until it broke this structure right here. Until it broke the structure right here. You see, that's a break of structure right there. Let me use this other tool to draw it. So there's a break of structure right there to indicate that the bearish trend will still continue. So that is it. But personally, I won't even allow my trade to go down. I'm not a fan of holding trades. Within 30 minutes, I can get all the money I need in the market. I like stacking trades, and I flip accounts. People that flip accounts, they don't really use smaller sizes. Stack your trades and get the money you want. It's risky though. I don't advise you except you have the mind to do it. All right, so, and I don't just do it on any setup I see. It's when I have some level of confidence in my setup before I will do that. Now you see, I'll make some money, then get out of the market, maybe somewhere here or wherever I would want. I would make some good money. Just imagine selling from here down until when you notice it started reversing again. Like here, once you notice, look at this, a bullish engulfing, indicating that the market is changing trend, direction. It's going to retrace from here, so you can close. Then after that one, you can sit down and wait for another possibility. The next thing you will do is to bring the Fibonacci to this one, this high that was created here. Then extend it like I showed you from the beginning down to this one. Now let's watch what's going to happen. You see, price came down from here. Price came down to this level, changed direction, okay, retraced and got to this 50 level. After getting to this 50 level, see, it started and losing momentum. See what happened? You see what happened? This is kind of an inverted hammer, or something of some sort. Then the next thing, it crashed. So once you see it that that's crossed the 50 level and you see an indication that is going to crash, a candlestick pattern that indicates reversal, you enter your trade immediately. You enter your trade and you see what? See, it's sold up to here, also broke structure here. So, and the next thing is to move the Fibonacci tool to the next high and wait for the retracement also. So you see, price got down here. You see, it accumulated somewhere here, then started retracing up. It got to the 50 level. So this is the 50 level. See where it entered. This is the 50 level right here. Then you see this is an indication that the price will fall. You see. So even when you place your trade and you put your stop loss maybe somewhere above here, and you see it would never get to your stop loss. I did not get to the stop loss, and at the end it started selling down. Guys, this is enough money. It broke structure also. Take note, it broke structure. So you can practice this. You need to do a back testing on your demo account first. You need to do back testing on your demo account. You will see this possibility. This thing is a very high probability setup to make nothing less than, even if it's $300 a day, you can make it depending on your capital. Because somebody like me that likes flipping accounts, once I notice good setups like that, I make good money. Now look at something else here. Look at something else right here. Look at this place. The first thing I discussed in this video. Look at it. See, price got to this level and retraced. So if you were online, or if you were in the chat and noticed this, the first one got here, then the second one reversed it. You wait for the third one. You see, and imagine CCC. Guys, this thing is working. See, look at the first one. So you just be catching spikes. See, it doesn't matter if you don't trade every day. You don't need to be trading every day, because these setups may not be coming on a regular basis. They may be coming once in 2 days, but just be sure that once it comes, you must make money, guys. You must make money. Look at this. Look at this. Look at this. So even at this point, maybe you try to enter a trade and you see it didn't go your way. You might lose this one, then you forget about it. Why won't you see? Guys, this thing is making money. I don't even know what to say again, honestly. This is a very simple strategy. You don't need much indicators, just the Fibonacci tool. Just the Fibonacci, and also noticing price reversing on at a particular level or zone. Once you notice price is reversing at a particular level, take note of that level, then wait for price to get back there, then you enter your trade. Like now, you see there's a change of character right here. This is a high change of character here, showing that the price is now going bullish. You see, it went bullish, then went down. Guys, I think this video is already too long. I need to stop it. From what I've told you now, you can make good money. Guys, you can make good money. Just be practicing on your demo account. What you need to do, look for areas of where the price is ranging. When you notice price gets to that level and reverse. And also when you are in the trending market, use the Fibonacci tool. Once it crosses the 50 level, you notice a reversal pattern, then you place a trade. The same thing happens when you want to buy. I am not I don't want to teach you how to catch spikes, how to trade against spikes in this, but the reverse is the case. If you want to trade against spikes, it's still the same thing, but it's risky. Trading against spike is risky, you know. So if I would want to trade against spike, let's say I notice that this thing has broken structure right here, like since there is a break of structure, then I will want to begin from this swing high, swing low. You drag it down to the top, you see, and you see it touched the 50 level and started reversing. So it touched the 50 level, started going back up. You see, you can buy and buy and buy up to this point, all those things. So guys, practice to get used to it. It's very simple. I guarantee you will make money. You will make money if you follow this strategy. One reason you will not be making money is because you watch too many videos on the internet. You'll be watching this one, then you see another one that looks like the holy grail, and then you rush into it. You are not stable. You practice one thing at a time and see how to succeed in it, because these strategies I mentioned here are things that are working. There are things that are working. Like this one is just pure price action, just pure price action. Not indicators, pure price action. That if you can practice well, you might succeed in making good money. And also, you can also test this in other markets apart from crash trade. You can try on maybe other booms and crash pairs, or even volatility indices. Just practice. You will make money. I guarantee money. We are phenomenal traders, guys. So um, the video is already too long. Please practice and let me see results in the comment section when you start making good money. Peace out.